so we want to make sure we get it in place where it does improve that experience for the employer and the employee. So it's got to be both, right? We've got to keep our businesses in business or there won't be jobs. So we need to talk about it's actually an ecosystem, and it can't be one-sided, and it has to be improving that piece of business for the ecosystem and making benefits better, which has so much room for improvement.
Welcome back to Exploring Growth. Today we have the opportunity to kind of get in the weeds a little bit and talk to an expert on employee benefits, healthcare, employee work-life balance, and probably everything in between. My guest today is Brandy Burch, founder and CEO of Benefit Bay. Welcome to the show, Brandy.
Thanks, Lee. Thanks for having me.
Okay. So I thought we could start off by just kind of telling my story in that I've never shared this before on my podcast, but back in the mid 2000s, I worked for a consulting firm that helped companies with benefits. And I was there for about 5 years. And I was really more business development than I was a consultant. But I would bring them in and so I kind of watched over their shoulder of how they did things. And I was licensed and everything. I could, do all of the stuff because you had to be in sales.
Yeah.
But what I watched them do, which I thought was pretty clever at the time, and I'm curious to see if companies are still doing this, is that they would come into kind of a mid-sized company and they would create sort of tranches with their employees, right? So they would take one and they'd try to push them into Medicare because Medicare can kind of shoulder that healthcare burden. The ones that are older, and there usually weren't a lot, and then they would take the younger ones that are typically more healthy, and they would try to kind of carve out the younger population and put them on a lower cost plan. And then everybody in the middle, what they would do is they would put them on a major medical plan, but really, really high deductibles. And then they basically used it as a mechanism to self-fund, right? So then everything in between that wasn't covered the company would fund. And then it kind of became sort of a lower cost alternative that the company could pay, smaller hundreds of dollars every month to cover a portion of their healthcare. And they could make that sort of a flat fee across the board for all the employees. And then anytime something would come up, if an employee had some kind of, case that would be sort of caught in the middle, then the company could come together and sort of rescue them. And so then it was looked at favorably by the employee that the company was paying for their medical situation. So I'm curious have you seen companies doing that, and are they still doing that? Because that was a long time ago.
Yeah, I think companies have to get really creative with healthcare, and they have done so. I think some of them have thought of those ideas or maybe be consulted into those types of programs and then found themselves with some risk.
Mm-hmm.
Because they're really taking on that risk role there to try to control budgetary costs. And we all know that one laser claimant can destroy something for an employer population and that one health crisis or emergency. So I think that people are still being creative. And I think that's one of the things that led to ICHRA having so much momentum. I think companies are still doing self-insurance. And then there's more complex regulations that have evolved since you were in that seat.
Yeah, I assume that would probably blow that up.
Yeah. Around employers really trying to step in that gap or get creative or class employees unfavorably or put certain people in different types of dynamics that create unfair contribution scenarios.
Yes.
So I do know for the employer, it's gotten a lot more complex in the regulatory environment of self-insurance. And then those are seen as those employees' benefit dollars that have to be invested appropriately or spent appropriately. So there's regulations around that as well. So I mean, it's still there. There's so much creativity, and there are even more additional health plans entering into the market that sell these types of access programs and major medical risk carve-outs. And so it's very complex out here in the benefit world. And there's still all of the business development reps out there trying to get that dollar. And then there's a lot of employers who don't know really how to make those decisions. And they're sitting on a budget crisis in some instances, and they have to try to do anything to make it work.
Yeah, I imagine the landscape for the financial part of being who's the fiduciary, who has the financial risk there, the legal piece of it. Everything's gotten so much more complicated.
Yeah.
But so what I'd like to do first is just kind of have you tell us a little bit about yourself and your background, so it gives us context to your ideas, and then Benefit Bay. What's Benefit Bay all about?
Yeah, I mean, I'm Brandy Burch, the CEO and founder of Benefit Bay. But me as a person, I'm a mom, I'm a career woman, I'm a working woman. I've had 6 children. I've had my ups and downs and adversity in my life, and I think that that's made me who I am. I think being an operator and a financial leader has led me to my benefits expertise. I've been a benefits purchaser on behalf of organizations for a long period of time. I've been managing that risk from that seat. And I've been trying to come up with creative ways to maintain our recruiting edge or our retention of our employees. And benefits are always a huge piece of that, but then they're also a big part of your budget. So I come at benefits from understanding being a purchaser, from working with brokers on those risk scenarios. I also come from it as a mom, as someone who's had children. I've had children that have been healthy. I've had children that have had risk complications. I've had healthy pregnancies. I've had risky pregnancies, right? So I've had each of those scenarios that cause that same problem for that employer on the other seat. I know what that feels like on the other side of that as well. So, and then I've built great relationships with good brokers. And I've had brokers who I've stepped into an organization and they were taking advantage of the employer. So, I mean, I've seen all realms of what this ecosystem looks like. I've worked with great carriers. I've worked with terrible carriers. And in this job, I have to work with carriers and build relationships for technological innovation, for improvements in plan offerings, for, what does the market need? And I think all of the opportunities that I had in various industries, seeing different types of employees, working with different types of ecosystems and diverse populations, I can understand what varying areas across the US are looking for. I can understand the strengths in those markets, the weaknesses, and the socioeconomic challenges. So I think that that gives me a lot of leverage in this seat to understand how to make it better.
Yeah, and just thinking back on my time being around the benefits world, it obviously has changed so much, and everything's become so much more complicated, um, just due to the complexities on all the different levels. When you're meeting with companies, where would you say that most employers get it wrong when it comes to employee benefits?
I think most employers try to get it right. So I think that that's the one piece.
Sure.
I think they end up getting it wrong because they come in with their own sets of biases that are about how they experience benefits or what they themselves need for their family. And they don't necessarily consider the population and what those varying needs can be. They don't understand if someone would want a more limited network at a lower cost, if they're highly compensated and they want an HSA program. They don't understand that ability to get your child to the doctor when it's $165 a visit, when
Mm-hmm.
you're on a different income structure. So I think that there's sometimes just a lack of knowledge of what that feels like at each of those different walks of life that the decision makers sometimes don't know. In addition, the decision makers are usually working for those higher ups in the company that are also in those same similar
Mm-hmm.
biases when they're coming towards that decision. In addition, they have pressure to save money or they have pressure to solve the budget problem. So I think that it depends on if they have a great broker partner on the other end of that table. I think brokers sometimes are also trying to maintain their commissions and their
Mm-hmm.
benefit structure that comes with certain programs over others. And so I think that it's a combination of what the employer does wrong, and it's usually picking the wrong broker partner is the first piece. I do not recommend employers purchasing their benefits on their own without a consultant and taking
Mm-hmm.
on that type of liability. But I do recommend that they actually do some vetting of those brokers that they do business with. And then that they understand that there's no one benefits product that is going to be the solution for you every year. And for the same thing that works for industry up the street is not going to necessarily work for you. So just because you're part of a network of benefits purchasers
Mm-hmm.
as an HR seat or in a CFO seat maybe self-insured is working really great for this company over here, it may not be the best idea for you on your side of the industry or your side of risk tolerance or your side of team mix or your size as an organization. So there's just so many complexities that go into that conversation. We do not go into those conversations without a broker at the table. I think that's a place where Benefit Bay is different. We value the broker in the conversation, and we value those brokers who are doing right by their customers and looking for the right fit for them. And Benefit Bay was founded around ICRA. That's the individual coverage health reimbursement arrangement legislation. And we feel like defined contribution works in a lot of the cases, but defined contribution doesn't work in some of the cases. And it maybe
Mm-hmm.
is a better option for them to be self-insured. It may be a better option to be on a group insurance program. We
Mm-hmm.
want to ensure that employee population's in the right product for them. And so our biggest piece is a modeling tool in the front end that's a speed to market for that broker to evaluate if ICRA solves that case, right? And that's what we care about. And I think that that's an unpopular opinion in my industry. Everyone says ICRA fits for everyone. ICRA doesn't fit for everyone. There are markets where it's more expensive. There are markets where there are not great competitive plans. There's not great networks. And so we want to make sure we get it in place where it does improve that experience for the employer and the employee. So it's got to be both, right? We've got to keep our businesses in business or there won't be jobs. So we
That's
need
right.
to talk about it's actually an ecosystem, and it can't be one-sided, and it has to be improving that piece of business for the ecosystem and making benefits better, which has so much room for improvement.
Right. You mentioned this role of benefits purchaser.
Mhm.
Explain a little bit more who that is and where they fit in all of this.
Yeah, it kind of depends on the size of the company. We see in smaller companies, the benefits purchasers also HR, also operations, also maybe finance. So
Mm-hmm.
it's a bit of a hybrid human who's making that decision. And then as you get larger, there can be, certified benefits executives that are making that decision. And there sometimes can be a team of benefits executives making that decision, and they may do it even by committee. And
Sure.
each year, if you're managed by a board, you could bring your benefits RFP or your broker to that conversation. So that varies. I would say often our decision maker is that CFO who's going to say yes or no on a big shift like ICRA. HR is going to have a little more anxiety about that transition from a group product to an individual product and letting their employee members choose. The CFO is often going to say the significant dollar savings is worth the bumpy ride of the
Mm-hmm.
change, but HR is going to have to manage the bumpy ride of the change. So
Yes.
it kind of depends on the motivators at that company. But what we see is it's a hybrid of HR and finance making this decision, or business owner saying, I have to do something or I'm not going to still be in business.
So then Benefit Bay comes in as a consultant or broker or both.
We're a technology platform for
Okay.
that broker. And so we work with those brokers. We do help to educate the market. We're out here, doing podcasts. We're out here doing
Mm-hmm.
education at SHRM events, CFO events,
Mm-hmm.
all of those across the nation, and trying to get the information out there that their broker should be bringing this to the table. This is something they should quote every year. You should take a look if ICRA is great for you. We talk about populations it's great in, top populations it's not great in, and things like that. But at the table, that consultant is the broker. They are utilizing our tech. Often we bring our team because there is a service team that comes with this, right? We're there in kind of in complement of the broker. We
Mm-hmm.
have licensed team members. We're supporting this. We're just as intelligent as that broker at the table, but we aren't going to be the jack of all trades that they are going to be. We're not
Sure.
bringing you the self-insurance. We're not bringing you the group quote. Our
Mm-hmm.
quotes on their process, we may win if that employer picks ICRA. And if we win, then our team comes in and services them from a customer success implementation. Implementation
Mm-hmm.
helps their team, educates their team on plans. Most of these brokers are not experts in the individual market, and this
Yeah.
now becomes an individual market plan. They
Mm-hmm.
often aren't appointed in the individual market with those carriers Benefit Bay is.
Mm-hmm.
So we work in complement with them. We don't take over that relationship. We just service that relationship on the individual expertise. And then our technology submits that application and those payments electronically. And then we manage the fintech side of the business. If you think of a large employer could have 3,000 people, they could be on 2,000 different types of plans, right? Their families are all
Yeah.
different. And so average adoption at an employer is around 50 or 60% are enrolled in benefits because they may be
Okay.
on a spouse, right? Or they
Mhm.
may not yet be 26 and they may be on mom and dad. So if
Sure.
we have a 3,000 life employer, 2,000 people will be on individual plans that they chose through our technology. Those are 2,000 individual payments each month. Imagine an employer doesn't want to see 2,000 individual payments. They don't want to make them either.
Hmm.
So our technology does that. The employer wants to see all of that in kind of a group view, but they want to be able to see that, employee 1 through 2,000 are enrolled in these pieces and it totals X.
Yeah.
And they want one transfer a month into one bank account, even though these are these are registered as individual accounts for these
Yeah.
people that are involved. It behaves much like group from a payroll deduction strategy, a FICA deferral savings, all of that. So it's
Yeah.
very
That's really
complex.
interesting. It
Yes.
is very complex, and
Yeah.
it seems like an amazing resource because that's what it seems like. It's a technical platform that's helping you practically do things, but it seems like an amazing resource to guide everyone through. I haven't been in this world for a long time, and I'm realizing that as I'm hearing you speak, things are very different.
Yes, things are
And
very different.
it's cool. It's cool to hear, though. I mean, that's such an interesting piece of technology that really does lift all boats, I think.
Yeah, and I mean, I guess we classify as health tech,
Hmm.
we classify as insure tech, we
Hmm.
classify as fintech, we classify as a SaaS subscription to that broker for their CRM sales
Yeah.
tool set. So we're absolutely very complex technology that's solving a lot of those pain points in individual group benefits hybrid model because these
Yeah.
are individual policies, but an employer group is sponsoring that ICHRA contribution. So I just love the power of choice, though. I mean, and
Hmm.
that's really what this is. This is the power of choice because what is great for me, I mean, I have a pretty small team here. There's 26 people that are on benefits of the
Hmm.
33, and our 26 people are on 24 different plans, right?
Hmm.
So I couldn't have made a choice that would have mattered for the individuals that work here. The
Yeah.
ages we're in, I looked one point, we're in 4 different generations on our team, right? So
Yeah.
we have different experiences, we're at different life stages, and we have different needs. And then we're able to use those dollars for the best for our own families. But the organization can set a budget and has a defined contribution. So those individuals can spend those dollars how it best matters for them. But I can also budget as the CEO of this company
Hmm.
fairly easy what a new hire is going to cost me.
Yeah. I love that. So if we think back to kind of where we started in this, and that is, you know, employers, and then now benefit purchasers. Now I'm aware of what that role is.
Yeah.
They're thinking about their plans annually, and they're thinking about how to maximize on all the things we've been talking about.
Yeah.
What's the sort of, and it may vary probably from company to company, industry to industry, cultural fit to different cultures. Um, but what's sort of the inception point these that maybe leadership at large or these purchasers need to be thinking about when they're going to create or revise a benefit package? And what I'm trying to get to is, what's the best place to come from? Is it like, hey, we want, I mean, I know they're always trying to save money. Everyone's trying to save money.
Yeah.
So that's
World class. They're not going to save. Traditionally, they're
right.
just trying to not go up 30%, right? Yeah.
Right. Yeah. So that's a huge piece, which is probably the primary driver for most companies. But not to be altruistic, but if they put that aside and said, okay, we really want to put our employees' best interest at mind, and we want to hire top talent, and we want to keep them, and do all the things that we need to do from our end. What's the place where should they start with that thinking?
Yeah. I think they should start with understanding their employees' dynamic. So
Okay.
I think you have one dynamic in a professional services firm where everyone's making 6 figures.
Hmm.
What is going to be something that population may or may not be really happy with is different than what we see as a ran really great fit for ICRA is diverse populations,
Mm-hmm.
where you do have those professional services that are really high compensated. You have middle market
Mm-hmm.
kind of ranges of compensation. You have a lot of more entry level or blue collar team members. And so there is such a disparity in what people need in
Yes.
that complexity. And if you add geographic dispersed teams, and so the networks that are available in Massachusetts versus Florida versus California versus
Mm-hmm.
Colorado, there are some areas where Geisinger health plans may make sense for somebody in Pennsylvania, and Kaiser may make sense in Colorado and California, and United Healthcare may make sense somewhere else, and Connecticut may work in Connecticut.
Yeah.
And you can't get a group product that unlocks that right now. If you get Kaiser, you have no out of network costs outside of Kaiser. If you get some larger group product, you can't access a Kaiser network. So
Mm-hmm.
you're limiting your team members' ability in their state and in their network of coverage to get the best for their dollars. And you're also driving up costs by trying to cover a national network
Mm-hmm.
of doctors that aren't necessary. So I think that taking that on, number one, I think looking and being open minded to other products. You
Mm-hmm.
know, in some cases, direct primary care works for populations. In some cases, major medical works in
Mm-hmm.
populations. In some cases, the self insurance is a really strong product for them and can help them manage costs and have member engagement. But if they don't have the right team members available and they don't have the right risk model, that may not be something that's sustainable for them either. We're seeing a lot of self-insurance groups come over to ICRA, and it's traditionally because they've had a handful of people that land in, you know, cancer diagnoses and in
Mm-hmm.
various high cost drugs that are causing something that's unsustainable for the employer to manage from a risk perspective. And so
Mm-hmm.
I think that just understanding your heartbeat to work for your company is number one. And I think we don't, it's such a complex decision to make each year, and I
Yeah.
don't envy the people who make it. I've made it often where it's
Mm-hmm.
harmed me, it's harmed someone else. I think in mergers and acquisitions, it's really where it's most heartbreaking usually.
Mm-hmm.
And I personally still think about this to this day. I worked at Limelight Health. We were acquired by Fineos. I was put in charge of the M&A project of merging their Atlanta team and our California team and our national remote team
Mm-hmm.
on one benefits program. And we traditionally offered Kaiser at Limelight Health because there was a San Francisco office, and we weren't allowed to offer Kaiser any longer under the new entity. So
Oh, I
I
see.
had a 8-month pregnant mama that I had to move off of a Kaiser network from a doctor she'd had her entire pregnancy
Mm.
over to a new product that didn't allow her to go to her pediatrician or her OB that she had picked. She had to go to a brand new doctor who wouldn't allow her to come until the insurance was effective,
That's
didn't
tough.
even validate her for an appointment. She ended up never even getting to see that doctor and delivering at a hospital that was strange to her with a stranger. And
Oh,
finding a pediatrician, I mean, that is stressful. Who
that is
wants
so
to do
stressful.
that to their employee? But it was the lesser of the evils. We had 5 employees that were negatively affected by losing Kaiser, and we had 500 employees to solve. And so I
Yeah.
you can be the human making that decision, and you can not want to make that decision, and you can still have to make that decision. So I
Yeah.
think that's why I'm one of the reasons why I'm most passionate about ICRA and being in the market with Benefit Bay is
Mm-hmm.
because that would have been solved had they chose individual benefits and defined contribution. Everyone could have chose what mattered to them rather than
That's
that group product, right?
Yeah, that's such. I'm appreciate you sharing that story because it's such a real example of how life works. Like we all have these type of things happen, and maybe not to that degree because that's stressful for me. Just having
Thinking
three.
about it, right? It
Yeah,
is
I've
so
had 3 kids
stressful.
and been through all of that three
Yeah.
times, and we had the doctor we wanted, and we had what we wanted, but
Yeah.
I can't imagine the stress that they went through, and just hearing about those types of things, we all have to deal with stress at whatever degree in our lives, and that's such a practical example of how benefits play out in real life. And that these stories, you probably have 100 more of those stories you could tell
Yeah.
these stories don't usually ever make it to light. And so I think that's kind of, I appreciate that, because it's kind of where I was driving to is when the rubber meets the road with benefits, how's that play out for each individual employee at this specific company, right? And so then that inception point of how they approach it is super important,
Yeah.
because if they don't start with the right thing in mind, they're going to end up with more of these cases.
Right. And I think it's also why I'm really passionate about it is how do we get to a place in the future
Mm-hmm.
where individuals are the consumers of healthcare, because it really is our dollars. We talk
Yeah.
as if it's our employer dollars, and it is our employer dollars, but at the end of the day those are our benefit dollars that have been set aside or payroll deducted for ourselves from ourselves, right? They're part of our compensation.
Mm-hmm.
And how do we get to a place where that decision isn't shifting all the time? We may take a job because the benefits were fantastic. The next year, the benefits may be terrible because they
Yeah.
have to make a decision, right? And so our life has been changed because we made a decision based on great benefits that are now no
Mm-hmm.
longer great. It's not that the employer wanted to take those away from you. Likely they had a claims issue that caused the carrier to drive the rate up. And so
Yeah.
there's all of these things that are building this experience for us as Americans. And American healthcare is broken. So how do we
Mm-hmm.
get to the place where we can be brand loyal to someone who actually answers the phone, pays our claims, takes care of our doctors, doesn't beat them down on, their services that they're providing? How do we get to a place where we can make our decisions? We buy everything ourselves. It's all
Mm-hmm.
at the fingertips for us to research. We
Yeah.
even make our own retirement decisions when we used to have a pension. This is the lone last decision that Americans don't have a lot of control over.
Mm-hmm.
That is our health. It is our health. It is not our employer's health. It is not our employer's, shouldn't be our employer or our broker's business what drugs
Yeah.
we are taking, where we access those drugs, what uh,
Mm-hmm.
what surgery we just had, whether elective or for
Yeah.
for health reasons. They shouldn't know we have a cancer diagnosis unless we want them to know. We may end up on a RIF schedule because we're now causing a claims issue for them,
Yeah.
and they're worried about our health. Those types of informations. Maybe I'm pregnant. I don't want my doctor to know. I mean, I don't want my company to know. But currently in self-insurance programs, those drugs and all of those visits and all of that behavior is all tracked and given to the employer. So how do we get to a place where we get that back? We take that
Mm-hmm.
back as consumers. We have the power in our hands. And I do think that ICRA takes us there. And I think that allows consumers to be loyal to brands and brands to actually provide customer service. Because right now,
Mm-hmm.
carriers treat individuals a little bit kind of like any of our government services. And we
Yeah.
have to call them. We have to have long hold times. We have to wait 90 days for our doctor to be paid, and we continue to get collection notices. And so many of our doctors are leaving networks because they want to be paid cash. Now we're going to have a benefit over here that isn't worth anything,
Mm-hmm.
right? So how do we drive that action? And I think we drive it by choice, and we drive it by allowing individuals to make that choice and kind of shift those alignments. I think previously those alignments were based on compensation to a broker, and that carrier could just get out there, pay lots of high compensation and get that group year after year, or buy or win that business. And
Mm-hmm.
now they're going to have to buy or win my business. And so maybe not a commercial,
Mm-hmm.
instead, maybe actual services, maybe not their name on a stadium. Maybe it's going to come to the actual services that you provide and paying that doctor's claim. So I think that that's what most excites me, is the only time you're going to make change is when you start to drive the behaviors that are going to drive the change, or you put in action those pieces that are going to matter.
Yeah, this is all super interesting, and it's kind of opening up a whole new window in my mind about all this. I literally, on the next episode, I'm bringing on a specialist who has a tech company that basically helps provide healthcare providers fix their equipment so their equipment works properly, and they can see what's happening with their equipment so that patient care is improved. So I'm thinking about that as you're talking, and
Yeah.
I'm just thinking like, wow, how the market would change so dramatically in so many great ways,
Yeah.
both for business and the economy, but also for healthcare, as it's provided to the patient.
Yeah, the provider. I mean, I
Yeah.
encourage people to start talking to their doctors. Who are the carriers that care
Mhm.
about the patient's care, who don't intervene all the time to try to
Yeah.
stop? Often I hear horror stories of people, they needed a test, it was denied by,
Yeah.
the pre-certification was denied, and then later they get a diagnosis that
Mhm.
could have been prevented earlier at an
Mhm.
earlier stage. But I think that those types of informations can start to put us in the power. I think the future of benefit base unlimited, and I'm
Mhm.
really excited about ingesting medical records on behalf of that individual to help them make decisions, but not giving it to anyone else.
Yeah.
And having the individual have the information that right now the employer and the broker have around, how do I save money? So how do I save my own healthcare plan money if I
Mhm.
need an x-ray, and which one's rated the best, right? And so I can make that decision for myself, not my employer telling me I have to go to XYZ company to get my x-ray because they've got a better deal with them, right? So I want to
Yeah.
publicize that
Yeah.
information within the individual's experience, not for anyone else's eyes. Yeah.
The democratization of healthcare.
Yes.
And I think it's pretty sad that we're in a place that we are, that we're having to fight for it. But let's talk about Benefit Bay a little bit more in terms of how you're growing the company, because that's interesting to my listeners as well. Where are you at? How long have you guys been around? Are you looking for funding? Where Tell us the whole story.
Yeah, so we've been around since April 2021.
Okay.
First year was an uphill climb. ICHRA was new and people didn't want to hear about it. We
Hmm.
sell to brokers. Brokers weren't willing to sell it. It does reduce their compensation. So
Yeah.
they weren't willing to hear that, right? So it
Yeah.
was a bit of a slow tick the first year. We were
Sure.
focused more on those smaller size groups year one, and we really had a limited traction. We were able to sign 80 employers. I say that's limited traction because when you're under those smaller groups, that's 1,600 people after
Hmm.
a year. And when you're getting paid $20 a person, it doesn't really add up to being a sustainable company or a sustainable tech company.
Yeah.
And so we really focused in year two in growing the business through expanding those current broker relationships we had made, but expanding it to groups bigger than 100. And it's interesting when you're a startup. You think, wow, let's go 100 to 500. Let's see how great we do 100 to 500. And
Yeah.
we learned, wow, we do 100 to 500 really well. Like, I wonder if we can go over 1,000.
Yeah.
And then our tech wasn't even built to handle 10,000. We recently had to expand it, like
Hmm.
from a quoting perspective at
Yeah.
speed market, from assigning 100,000 bank accounts quickly, right?
Yeah.
Because there's growth in a population and everything was 10x of what the
Uh-huh.
employer size was. And so those types of things and hitting those hurdles just really excite me now, because I think, well, how small
Yeah.
minded were we? We thought, wow, the biggest group will ever service is 2,000, right?
Yeah. Yeah. Yeah.
And so we've been throwing those barriers that we put up for ourselves just right out the window. And
Yeah.
I've been
That's great.
excited because some of our early brokers, that's been where a lot of our growth has been.
Hmm.
Some of those early relationships that we built in 21 and said, take this ride with us, help us develop this tech, help
Hmm.
us, product input, like product market fit impact.
Sure.
Some of those early relationships have just been the expansion revenue they've seen. They started out with just trying to win business with ICHRA from other people not willing to bring it to the table.
Hmm.
And they quickly, it's 25% of their business. Then they were acquired and had a success story. In more than one instance, they've been acquired by all their growth and their expertise. And,
Yeah.
and then now we've been able to navigate these larger national agencies that acquired these smaller agencies. And so that expansion and growth, even if I would have sat down and put it on paper, I wouldn't have believed it would
No.
happen. And what it took us 3 years to get to, we were able to do in 2 months this summer, right? So it's
Wow.
the growth now is what we used to think national open enrollment was. Wow, it's so hectic. It's so busy. There's so much coming our way and all the
Hmm.
volume, because we would 3 and 4x each year. We're
Yeah.
now 3 and 4xing in months in the summer when really it's not considered the ripe time to sell benefits.
Right.
And so I think that our growth has been a lot of organic. We've been limited funded. I mean, you can
Hmm.
do any of the research on our company, and we are funded to about a quarter of anyone else. And
Yeah.
we're not raising right now. We closed a seed extension round for us, and that is our path to profitability as an organization. So no, we're not currently raising, but what we are seeing is that we are seeing a lot of broker movement that used to take us a lot of work to get into that conversation. And
Yeah.
the number of meetings that just come our way every single day are so exciting. And then we're seeing, maybe we traditionally sold to 3 states of an agency. We're now seeing that agency say, we need a national approach to this.
Hmm.
ICRA needs to be at every quote. I had
Hmm.
been fighting for that for 3 years, that you should evaluate ICRA at every conversation. It
Hmm.
is or isn't a fit. It should be on the proposal, because
Right.
maybe they have another reason why they need it. Maybe they have the network challenges. Maybe they have the access to care challenges. Maybe it's a flat budget decision,
Hmm.
but they still may want to do it because it solves 22 problems they've been having and complained about all the time, right?
Yeah.
And
Yeah.
so I've been fighting for that for 3 years, and we're finally seeing it happen. So I think
That's
that that's
awesome.
where we're seeing the most growth and where we see the potential for the most opportunity. At one agency, we had 14 brokers selling. We have over 700 that are going to be selling for January in that same agency. So what I can see is that I have no doubt we'll 10x this year.
Hmm.
We're already for sold in January for Xing, and I I don't know. It's exciting because we nearly
Yeah.
died a few times, and I just want to tell
Oh,
any of your listeners,
yeah.
don't give up. Like,
Right.
building a startup is hard, and some of those peaks and valleys can get to you. Uh,
Yeah. Sure.
just keep pushing and trudging. It takes a long time to educate in a new space, a
Yeah.
really long time to get buy-in. People thought it might be. Uh, they thought it might be political partisan. It passed during the Trump administration. It was reinvested in during Biden's administration. Various states of both sides have
Hmm.
invested in ICRA. So people wanted to know it was here.
Yeah.
People wanted to know it was here to stay, and it wasn't going to flop either way.
Sure. It
Yeah,
does sound like, at first glance, it's a sort of a bipartisan thing. It's
yeah.
not going to be on one side or the other. And it sounds like you're really your traction is coming from brokers and agencies. Are you guys can consumers come directly to you and use your platform yet, or is that something that in the future?
Yeah, no, consumers can't come directly to us to use our platform now. That is a vision of the future, because we do believe individual benefits should be available for gig
Right. Yeah.
economy workers, professional workers, anyone who's out there hustling and needs to have a marketplace to shop for their insurance.
Hmm.
ICRA legislation is around that employer setting a defined contribution and meeting ACA guidelines. So right now we are servicing just the broker and the employer. And when employers come direct to us, we do refer them to a broker. We are not trying to compete with our brokers, and we remain tried and true to that.
That's good. Yeah. So then, how does Benefit Bay make money?
Yeah, it's a good question. So we make money by a enrolled active employee membership model. So first, on the front end, that software subscription, there's a SaaS platform fee to the broker. So we make
Okay.
money from that. And
Okay.
then they become our sales channel. So that's our go-to-market channel. We don't have to pay a large marketing and sales team
Yeah.
because our brokers are out selling and
Yeah.
using our tech. If ICRA is the solution for that employer client, that employer then signs an agreement with Benefit Bay for our banking services and all of the above. And they're going to pay, that employer is going to pay $20 per employee per month for our services. And our services include enrolling that employee in their benefits, supporting their education, helping them with any of their qualifying life events, and then setting up all of their fintech and their banking, and then exposing it to them. So that helps the employer budget as well, because if an employee waives coverage, they're not paying for a service, ongoing
Hmm.
monthly, that we're really not taking any actions. We do gather those waivers and compliance in the front end. And then if Benefit Bay is the agent of record on those policies, which we are in the majority of cases, because as I mentioned, brokers are not licensed on the individual side in
Right.
traditional model, then there could be an eligible commission on that product, but they are very low on the individual side. So
Sure.
several of the carriers don't have any commission. So that's a barrier to entry there for a lot of brokers wanting to
Hmm.
sell these policies.
Yeah.
But if there is a commission, then Benefit Bay enrolled that policy. We are commission eligible. So those are traditionally $18 a member. So
Yeah.
rather than having a motivation that's around certain drugs and certain
Hmm.
decisions and care models, which happens in self-insurance, where you get a piece of all of those pies, just to set fixed dollar amount. And in spirit of transparency, we disclose that throughout the process. So if benefit bay is going to get paid or their broker is going to get paid, they're going to know that. If benefit bay is getting $20, they're going to get billed every month for that $20 for that active member. But the employee is not paying for anything to benefit bay. The employer or the broker is.
Yeah, that's great. I like it. Very transparent.
Mm-hmm.
So what's the path forward? Are you building to sell? Are you building to get acquired? What, or are you building to hold, or what's the plan?
Yeah, I mean, we're building to improve healthcare.
Yeah.
So
Yeah.
I'm not in a like, let's just build something in 2 years and get acquired. That's not my
Hmm.
mindset. That's not how
Hmm.
we build. That's why we build to path to profitability. I think if you build just to continue to raise capital, that's a whole nother model to maybe go
Yeah.
public. But for us, I don't really see that a carrier owning an ICHRA provider is the right thing. They'll just drive decisions to that specific carrier plan or
Hmm.
make it to where it doesn't have an objective decision. As well, if we're bought by an agency, it would just be for that one agency. And I really
Hmm.
like the free market play. Obviously, we'll see where benefit bay goes, but we're
Yeah.
not on the market to be sold at this time, and that's not something I have in my horizon. I really want to grow this thing to where it actually makes a social impact on benefits
Yeah.
and changes the ecosystem. And
Hmm.
so you have to stay in for a little bit longer game for that to work. Yeah.
I love it. It's an amazing vision.
Yeah.
Well, this has been a great conversation, and it's enlightened me a lot in this world because I haven't been in it in a while. And wow, things have changed a lot. So I
Yeah.
appreciate that.
I have a
Um,
daughter who's a doctor and a daughter who's a nurse, and I see the wrong side of healthcare, and I hope to
oh,
be
I
that
bet you
for everyone.
do. Yeah.
Yeah.
Yeah. You see it from all sides.
Yeah.
Wow.
No,
It's not pretty.
it's not pretty. Yeah. And it
No.
can get better and has a lot of room for improvement. I think there are a lot of people involved who want to make it better. So I think we can.
Yes.
It's
Agreed.
not going to turn the ship over. It's a cruise ship. It's not going to turn in a day,
That's
but
true. But
yeah,
it can turn.
but hopefully it turns before we hit an iceberg or something, right?
Yeah. Right.
Yeah.
So if I want to send people your way, where do I send them?
Yeah, benefitbay.com is your best resource. We have a great website out there. I think LinkedIn, if you want to connect with me directly, I'm out on LinkedIn, Brandy Burch, CEO of Benefit Bay. I have Twitter and Instagram personally, 6girls13. I have 6girls. So that's my handles there if they want to come follow me there. And outside of that, just reach out. If you're an employer who wants some resources, introductions to great brokers, reach out. If you're a broker and you have a technology provider that's not doing a great job or making this administratively heavy for you, please reach out. And then if you're an individual who wants to provide some, input or case studies or need some information to help negotiate with your employer to bring individual choice at some
Yes.
point, we
Yes.
welcome you reaching out as well.
That's great. Awesome. Thanks, Brandy.
Thank you, Lee. Thanks for having me.